NVIDIA and the AI-powered rally showing little sign of slowing today, with the chipmaker hitting an all-time high. The Nasdaq closing above 17,000 for the very first time. NVIDIA is up nearly 20% since its earnings report just last week. And check out some of the other names in the chip sector hitting all-time highs today: Micron, NXP Semi, Qualcomm, and Texas Instruments. So, should investors count on NVIDIA to keep driving the market higher? Joining us now is FundStrat's head of research and CNBC contributor, Tom Lee. Tom, good to see you. So you're still bullish heading into June. You say there's too little investor confidence, too much cash on the sidelines, but it seems to be flowing in now. So how do you invest and not get burned by volatility?
Well, it has been one of those years where, investors have been hesitant all year, and I think we have had some short pullbacks, but I think the best strategy for investors is to really stick with what's working. And what's working is AI-related names, whether it's NVIDIA or highly correlated stocks like Cadence or Supermicro. The Ozempic-related trades. Industrials, financials are doing great, and the Bitcoin and the proxies as well as, I think, a growing small-cap stealth rally. So I think there's still a lot of ways to be invested in this market.
Tesla stock has taken a beating this year, plunging 27%, and causing many on Wall Street to throw in the towel on America's leading electric vehicle maker. But one analyst isn't giving up on Tesla's bright future so easily. Simon Erickson of 7 Investing sees what others are missing, that Tesla is so much more than an automaker, but a full-on AI company. This is why Erickson placed a $645 price target on Tesla stock, signaling a mind-blowing 257% upside from current levels. In today's video, we're going to walk you through Erickson's bull case so you can decide for yourself if Tesla is really a disruptive powerhouse in the making and a once-in-a-lifetime buy opportunity, or the exact opposite. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Arjun is with me. You were at the same Q&A with Elon Musk last night. It was eventful, wasn't it? I pitched this question around the deliveries, actually, for a low-cost EV that the market's been wondering, is it coming to market? What's the timeline? I pitched that question along with whether there was a green light now because of these tariffs that the Americans are enacting on cheap EVs from China. Then the line went down. So it was a nervous wait.
We didn't want to answer the question, Karen.
Right. I mean, there was a moment where the crowd was saying, well, was that question too tough? And then eventually when he came back and, he didn't really want to talk about stock-specific news, played very nice, didn't he? Didn't really stray too far from a script. He was mostly ready to take questions about other elements around technology, not stock-specific news, but he gave us an answer around the tariff side. And don't forget, there's a lot at stake here, right? We've got EVs flooding in from China into various markets. The Americans are pushing back, but Tesla has a lot of operations in China.
Exactly. Just go back to January. Elon Musk made some comments about trade barriers more broadly, and he said that if there were no trade barriers on Chinese EVs, they would demolish the competition. And I think that underscored not just his fear, but actually the fear of the broader auto sector in terms of the power, this pace of innovation, but also the price of some of these Chinese electric vehicles. Now, if you fast forward now, we've got these tariffs in place, but as you said, Tesla has a huge operation in China, and some of the cars it sells globally, including in the US, do come from its Chinese gigafactory in Shanghai. So that's going to be interesting to see how that plays out, whether actually the gigafactory in the US and in Berlin, Germany, are going to do more of the heavy lifting when it comes to the cars that are being exported to the US as well.
The self-driving technology is something that Elon Musk wants to bring to market. He wants to take that. You could tell in the commentary yesterday, this is one of his big goals, to have self-driving in some sort, whether it's on-road, in the air, with the robo-taxis. So that was fascinating.
Before he founded 7 Investing, Erickson served as lead advisor of Motley Fool Explorer, where they invested each month into the market's most innovative companies and issued stock recommendations. The 48 picks he made in this role averaged a 59% absolute gain and collectively outperformed the S&P 500 by 2,145 percentage points, so his opinion on where Tesla stock is headed in the future is something investors should definitely consider. In a recent tweet, the analyst said that after a solid month of deep diving into Tesla, he came to two important investing conclusions, and the first one is that as a car company, Tesla stock is worth just $104 per share. This implies a downsize of nearly 42% from current trading levels, but the analyst says that the traditional auto manufacturing industry just isn't all that attractive for a variety of reasons, with one of them being the fierce pricing competition. There's also the fact that it requires billions of dollars to build manufacturing factories, as well as regulators, recalls, and political intervention. But he assumes that Tesla will be dominant and will achieve massive economies of scale from its gigafactories. He expects that Tesla will eventually be able to sell 250,000 units of its Cybertruck each year, and that the new Model 2 affordable car, which will be introduced in 2026, will reach 3 million per year. Overall, he predicts that Tesla as a whole will employ more than 400,000 people, sell more than 9 million vehicles, and generate more than $300 billion in automotive revenue by the year 2040. But he says that even this global dominance of the EV industry isn't enough to justify its $600 billion current market cap. He adds that Elon is a smart guy and already knows this, so there has to be something more to support Tesla's valuation, and that's where his second conclusion comes in. He believes that Tesla as an AI company is worth $645 per share, and we're going to get into why he thinks so right now. Hello everyone, and welcome back to Investocracy. The analyst believes that AI is where Tesla steps on the accelerator and leaves the other automakers in the rearview mirror. The company's cars won't just bring in cash from their upfront sale, but they'll continue to generate recurring revenue from FSD's $99 subscriptions every month. And his forecasts for the company's FSD revenue are seriously something else. He says that there's around 5.8 million Tesla vehicles on global roads today, and he estimates that this number will increase to 6.7 million by the end of 2024. Assuming that 10% of those total vehicles subscribe to FSD, that would result in Tesla collecting $300 per quarter from 580,000 cars today and from 670,000 by the end of the year. In turn, that would result in $563 million of recurring FSD software revenue in 2024. This might not seem like a lot now, but the analyst expects the percentage of Tesla owners that subscribe to FSD to keep increasing, as well as the number of Tesla cars on the road, and assumes that it'll reach 50% in 2036 and beyond. Thanks to this, he assumes that Tesla will be able to generate over $60 billion in annual FSD revenue by 2040. He also talks about Tesla's robotaxi network, saying that many Tesla cars will belong to the network in the future, charging only $1 per mile for riders and providing Tesla with a 20% take rate of the fare. He believes that autonomous vehicles will extremely expand Tesla's addressable market, as the company won't just compete against other automakers like Ford and General Motors, but also against companies like Uber and Lyft and taxi services. He then assumes that by 2028, Tesla will be able to produce 3.5 million affordable Model 2 vehicles, and that 2% of those will be autonomous robotaxis, so that's around 70,000 vehicles. If the average robotaxi travels 50,000 miles per year, the rides cost $1 per mile, which is around half of Uber's current rates, and Tesla takes 20% of that as its fee for running the network. The company would generate $50,000 in gross bookings and $10,000 in revenue per year, meaning that 70,000 robotaxi vehicles would generate $700 million in revenue in 2028. He also expects that the ride's price per mile will rise alongside inflation to $2 per mile by 2038, and Tesla's take rate will also increase, so by 2040, Tesla would have 11 million cumulative robotaxis, generating $355 billion in annual revenue. For many people, this might sound too good to be true, but the analyst points out that last year, Uber reported that it hired 5.4 million drivers globally, facilitated 7.64 billion rides, and generated $138 billion in gross bookings. So, his assumptions would imply that Tesla's robotaxi fleet in the year 2035, more than a decade in the future, would be roughly the same size as Uber's driver base is today. Meaning that his estimates aren't too unbelievable, especially when you consider the fact that it's a fully autonomous fleet that doesn't need to pay for drivers. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Elon Musk's AI startup, xAI, announcing a $6 billion fundraise over the weekend, lifting the valuation, according to Musk, to $24 billion. Joining us right now with more on this and the latest Musk pay package drama is Tim Higgins. He is the Wall Street Journal business columnist. And Tim, what do you think here? Clearly some demand for xAI.
Yeah, absolutely. Just a few months ago, the Wall Street Journal and others were reporting a lot less money was being raised. And so just kind of showing that there's this huge enthusiasm among some investors to be part of that Elon Musk magic, right? The concern, I think, for some out there in the Elon world is if you're a Tesla investor, what does this mean for Elon Musk's kind of AI ambitions, his broader ambitions? You've got xAI, a private company, a separate company. You've got Tesla, a publicly traded company, a totally separate company, all under the kind of Elon Musk umbrella.
I guess that would depend on how much of the AI brain power was powering the valuation in Tesla right now.
Absolutely. The broader question I think Tesla investors are kind of grappling with right now is, where is Elon Musk's ambition for AI? For so many years, he was selling Tesla as the idea of this AI company. It was going to usher in autonomous vehicles. It was going to have humanoid robots. And now he's talking about xAI as this huge potential for AI. We see it doing the same kind of things as OpenAI, but where is the AI future that Elon Musk is projecting, is envisioning, and which company is going to benefit from his vision?
You can visit Erickson's X profile or the 7 Investing website to see his full assumptions and DCF model for Tesla stock, but we'll give you his overall main takeaway for investors. Full self-driving is very difficult, but Tesla is miles ahead of the competition, which rewards the company with greater future cash flows, which surpass those generated by selling the cars. The analyst believes that people investing in Tesla should only do that because they believe that Elon will succeed in his AI ambitions of FSD and robotaxis, and that at $180 per share, the market is pricing in only around a 16% chance of Tesla succeeding in scaling these new ventures. While Tesla is a prominent AI player, the race is still very challenging with so many companies investing in autonomous technologies. But the prize for the ultimate winner will be extremely significant, as we've seen CEOs of leading AI companies, like Jensen Huang of NVIDIA and even Elon too, saying that all cars will be autonomous and fully self-driving in the future. If Elon Musk and Tesla can actually perfect FSD and introduce their autonomous vehicles to the mass market, the entire transportation industry will be disrupted, and this wouldn't be a hard thing for Tesla to do, as the company already disrupted the auto market. This is a market that'll be worth $15.94 trillion by 2032, according to estimates, so Tesla acquiring a big share of it will definitely send the stock to new heights, and that's what investors should think about when voting for Elon's pay package or buying Tesla stock. So, what do you think about these estimates? And is Tesla stock a buy at its current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.